Hi, this is Zeb Portanova from Team Victus and VictusHealth.com. I wanted to thank everyone for listening. The theme of the Victus podcast is to live victorious. We have numerous friends, amateur athletes, professional athletes, world champion athletes, business leaders, CEOs, and public servants joining us on a regular basis and talking about the trials and successes they have had in their lives. Thank you for joining. Please visit VictusHealth.com for your healthcare needs and engage with us on Instagram and Facebook at Victus Health. Welcome, everybody, to the Team Victus podcast. Joined today by a close friend of mine named Russel Cann. Russell is the Chief Customer Success Officer at a really cool company called Core Scientific. Been a longtime friend of mine. We're going to talk to you guys about blockchain and cryptocurrency and Bitcoin and a whole bunch of other probably rabbit holes that who knows which ones we're going to go down. But Russell's one of the top three, if not one of the top people in the world on blockchain and Bitcoin mining. And so we'll get down this really interesting story for anybody who's interested in it. So Russell, welcome to Team Victus podcast.
Thanks for having me. And I will say this is, if you're asking me questions, I'm giving answers. These are all in my humble opinion.
That's right.
And no way represent Core Scientific's official views or answers.
That's probably the most
If it does, I will try to say that.
That's probably the best way to do it. This is just Russell speaking for Russell.
That's right.
Nobody else.
Because I can go down a rabbit hole.
Yes. Well, we will. I promise you. But how did you get into the world of blockchain and Bitcoin mining? This is kind of the Wild West of the world of digital currencies out there. How did you get involved in it?
You know, it's a cool space. The technology is interesting. I got into it from a biz dev perspective, and then
what's
business development. So I had someone the last time we had a big bull run in 2017, I had someone want to lease one of my data centers. They wanted to lease it sight unseen and pay full cash up front for a multi-year lease. And that sounds great, but it scared me. And I thought, what's this mofo doing? And how is he going to make some money that I don't know about?
I appreciate you using the PG version of that word.
I did that on purpose.
You can be yourself, though. It's okay.
I'm trying to behave. So I looked at it and I found out, these guys were wanted to mine some cryptocurrency. I didn't know what cryptocurrency was, but the data center has a lot of power at it, and they were talking about GPU mining. So I actually went away with my wife and my nieces. We did a summer vacation, and I found out these guys were doing cryptocurrency. So I spent the next month, just diving in, and it is a rabbit hole. You get into it, and the technology is interesting. You can really see how the technology is going to just kind of wiggle its way into lots of different pieces. So the cryptocurrency itself and digital assets is interesting, but second to that, blockchain is just an amazing just database in general and storage of data. So really looked at it from the biz dev side, but then just got intrigued by the technology. So started out GPU mining. This was during the last big bull run. There's one going on right now. And very similarly, GPUs were in hot demand. You couldn't find them. Same thing's going on right now. But we built a lot of GPU rigs. We watched Ethereum go from a couple $100 to a couple thousand, or to $1,500 or something like that.
I got to walk in. I've known you since then, right? And there was a point when I walked into your building here where you used to have a data center and still could, but you don't.
Yeah.
And you had boxes of GPU units. I mean, almost as far as the eye could see,
just piled up everywhere.
Right. And I looked at you and I was like, "What are you doing, man?"
So the crazy.
How did you even get those? How do you even get access to those? Because they were really limited, right?
Very limited. It's the same thing. It's a supply chain thing, and there's a supply chain issue right now. We can talk about it a little bit with silicone. There's a shortage, and you just had to be able to follow the supply chain to get the hardware in order to process the algorithms. And, looking back, we really didn't know what we were doing. But a bull market can cover up stupidity really easy. And it does it a lot. A bull market in crypto covers up a lot of stupid people, myself included. And it did. We did not know what we were doing, but we designed and built, GPU rigs. And as fast as we could turn them on, they were paying for themselves. So it was pretty fucking cool. That's one. Sorry.
What's the over/under on?
I'm trying to control myself.
We got a bet going on here between Josh and Barry, who are not on camera, to see how many F-bombs Russell's going to drop in this podcast. It's okay, man.
So I'm working very hard.
You be you, Russell. We're not going to censor you.
But we would you turn these machines on, and they were immediately paying for themselves. So we were trying to build GPU rigs as fast as we could. Now at the time, fast forward now, and I will tell you
a GPU rig for somebody listening is like it's a computer unit, right?
That's a computer unit. About. So basically in blockchain, there's two different types of blockchain. Well, there's multiple types of blockchain. Let me back up a minute. But predominantly, there's proof of work and there's proof of stake. Proof of work uses computing power, GPU power, ASIC power to process an algorithm, to break the security on the algorithm, to process the transaction and verify that the transaction is accurate. Proof of stake is a different way to do it without using computers to to break the algorithm. And I'm trying to do this very high level here. I could go down a rabbit hole and people start turning the podcast off. But proof of stake is different. It's where parties involved stake their crypto, and if everybody kind of agrees that the transaction is legit, then the transaction goes forward. But in the world of GPU rigs, it's the same GPUs that are used in gaming. Your Xbox, your Sony PlayStations, they have a GPU in them. Your computers have a GPU in them for graphical interface. It's the same GPUs that are used for rendering video games or rendering movies or Avatar and those kind of movies have a lot of
compute power. You need a lot of compute power. Yeah.
And then GPUs, it kind of grew into ASICs, and ASICs are just application-specific chips that can do one thing. Like the cruise control in your car, it turns it off and on. That's an ASIC. The blinker is an ASIC in your car. It turns it on, it turns it off. It just does one thing. But for blockchain, the ASICs are very specific, and they process one specific algorithm. And the most popular one, of course, is Bitcoin itself. Mm-hmm. And there's a lot of manufacturers that make ASIC-specific machines, Bitmain, Canaan, MicroBT. They make machines using ASIC silicon that process the Bitcoin algorithm. But when we talk about Bitcoin, I want to make sure everyone understands there's a big difference. I guess not a big difference, but blockchain is the technology. Digital assets is a use of that technology.
That's right.
And then Bitcoin is an example of digital assets, or example of a digital asset. So people need to understand that. And blockchain came about because of the development of Bitcoin, but blockchain has a lot of other applications.
Yeah.
Now
hold on. Let's go back. I want to take everybody back to the time when you've got an entire stack of GPU rigs over here, and you think you know what you're doing. You build out a data center here in South Carolina, right? Probably the only data center of this kind in the entire state back in 2017, and you guys are just like, we're going to do this. I mean, this isn't a small amount of money, but you're all in.
We're going to do this,
and you're going to do it.
And we didn't know what we were doing. So
you put all these units to work. How did you even know where to direct them? Like, you knew there were pools at the time,
so
right? You can pool
that's right.
these things together.
So when you are in the world of digital assets, people pool their machines together into pools, and they try to process the algorithm together. And this way, the way most blockchains work is an individual machine will actually solve the algorithm and will process the transaction, and only that machine is awarded a reward, a cryptocurrency, a Bitcoin or an Ethereum or whatever. In order to speed up the process or to make it a little more even, pools were created, and pools just pay out pari passu. So, if let's use Bitcoin, if there's 100 machines on the Bitcoin network and they all pooled together and one Bitcoin was awarded, and there's 100 machines and you had one of those machines, you get 1/100th of that reward. So
That's
the way
right.
pools work, it's kind of pools all together. So we pointed our stuff. We were mining Ethereum at the time in 2017. And again,
and your units, when you say they paid for themselves, like the moment you turn them on, like you mean like within a month or 3 months?
Literally, we kept. We used various things to keep us awake 24/7 so that we could continue to operate. A lot of espresso. We used a lot of espresso and stuff because we had this hardware here, and we had to build it and put it together.
Yeah, you're building it, putting it, and you realize how much money you were possibly making.
That's right.
Because Bitcoin Ethereum at the time was on such a bull run that. So you literally the machines pay for themselves in less than 30 days, and everything you made after that was profit.
Absolutely, they paid for themselves very, very quickly.
That's crazy.
So
how excited were you when all this stuff came together?
Super excited. It was a lot of fun. We went down a rabbit hole, met up some of the guys that had founded Core Scientific, where I'm at now. We sold the company to Core Scientific. Interesting enough, we learned, as we got bigger with Core Scientific, that we really didn't know what we were doing because, it's all about management of power and management of heat. And at Core, we're the largest in North America at this. We have these huge data centers in Georgia, North Carolina, Kentucky, and these are just enormous centers that have enormous amounts of power, produce enormous amounts of heat. But most of our entire, we have engineers on staff that do nothing but design around heat management and airflow management because these machines use passive cooling, and at this point, it's not something you can do at your home. It's not something you can do even in this data center. It's just you have to be huge and to be efficient.
I was reading about some guy who was running rigs out of a couple of garages in California, and basically whatever the utility was came in and shut him down because he was overloading the grid.
Yeah,
I mean they use massive amounts of energy, right?
So they do. Now they're a lot more efficient than they were. But they use a lot of power and they produce a lot of heat.
And you guys, speaking of power use, though, I mean, Core's, how much of your guys' power is, I'd say renewable, hydroelectric, solar?
So we're at the 50% level of carbon neutral power, and it's if you ask me, in my personal opinion, is that digital assets are going to lead to more environmentally friendly power because renewable power is efficient power and is inexpensive power, and that's what we need for this to really work.
Hold on, we got to back up here because most people the layman may understand what Bitcoin is, may understand it uses a lot of power to authenticate the transaction for the computers, but you guys are using 50%, theoretically 50% of your power is renewable energy, right? Carbon free,
so that includes nuclear.
Free. Okay,
so
you're using nuclear.
Yeah.
So I would say the industry gets a bad rap sometimes because people just assume that it's this really huge footprint. But I was reading the other day that when you look at the entire financial sector as a whole, I mean, the whole financial sector uses massive amounts of power.
That's
Bitcoin
right.
and blockchain are now getting people to finally look at how to use renewable energy. Nobody was talking about the financial services sector and renewable energy before until now. And this could be a really good thing. It's like a turning point.
I think, again, this is my humble opinion, and I'm not speaking for Core here, but I think what we're going to see over the next few years, and as digital assets mature, we're going to see innovation in the power sector because digital assets are something that can actually be good for a power grid. Most people think that you can have power and you could produce it and you could share it anywhere, but you can't produce power in Florida and it make its way to Washington State. Power doesn't work that way. It degrades over time. So power has to be produced and used close to the production source. Now, what we've done in this country to help offset that is we create power grids. So you can create power, sell it into the power grid. It goes out close to where it was created. But if you sell that power into the power grid because it's interconnected, somebody might buy that power, multiple states away, but they're really not buying the power you just generated. They're just buying power off the grid. So you feed power into the grid, and then you take power off the grid. But the power being fed into the grid, for the most part, is used locally because the further it gets away, the less efficient it is.
Yeah.
But what that means is, in this country, we produced a lot of, especially hydro. After World War II, we became a massive manufacturing base. We were really the only country standing in the world. The rest of the world had gone to war. And there was large amounts of power infrastructure built in this country to support the rebuilding of the world. We were the manufacturing base for the world for the the late 40s, the 50s, and even into the 60s, while the rest of Europe and the rest of Asia got rebuilt, while Russia was rebuilding. And during that time, we produced this massive power grid. And there's, especially like the hydro side, and now we're getting into the solar side. But let's just talk about the hydro side. You made all these hydro plants, and that power to be used efficiently needs to be used close to its source. And that's what folks like Core do. We go close to power sources where there's abandoned infrastructure, where there's power grid, where we as a society have already paid the cost for that. And we like to locate there. I think we're a great economic development driver because we build out facilities, or we renovate facilities that have been abandoned that were previously used for something else.
Yeah, like your Marble, North Carolina plant. That was a what?
It was an old denim plant. It was an old denim plant, like Levi's denim.
Was in there?
It sold denim to Levi's. It sold threads for denim. And when Core bought that plant, it had not been in use for years. It had been a decade sitting empty. And we've now converted it into a high performance computing data center. It's filled with GPUs. We have a lot of folks that work there now. and it's a great town, and there's some very skilled folks there. And I would like to think they like working there. I love going to visit the town. It's a beautiful little town sitting in the valleys in western North Carolina. And again, a lot of that power comes from hydropower, but that plant had all the infrastructure built out, but it wasn't in use anymore. So, for us to take over a facility like that versus, having to build out new infrastructure is economical, but it's also environmentally friendly if you want to take that. You're reusing something that's already been paid for.
Well, and that's why I'm really excited for the future, the change that you guys can help be part of around, using renewable energy, carbon neutral energy, in a space that probably no one's ever thought about financial services and the amount of energy they use. And now all of a sudden you guys can be a driving factor in how to, make it more efficient and better, environmentally friendly for the world and for the US. I mean, that's a really good thing.
It's a strong thing.
So
we're a good load for the power grid. We're 24/7. We're 24/7 predictable load for the power grid. So we, and again, if you had someone from Duke or TVA, they could give you some more details on it. But we're, when you're a predictable load for the power grid, that's good for the U.S. power grid.
No doubt. Okay, so let's go back. I kind of went down this tangent around, energy consumption, but let's go back to the point where you have rolled your company up into Core Scientific, and it's a bunch of YPO guys that you kind of got involved with that were all in this space, and you said, hey, we want to let's come together and build something here, right? I mean, walk everybody through that process, and then how you got to, who you guys ended up hiring to be your CEO and your leader. Like, tell everybody a little bit of the progression of the story.
So it's really interesting and fascinating, really. So the guys that started Core Scientific, they were all involved in YPO. YPO is a CEO group. They had been involved in digital assets for many years. They started doing mining together. We added our company to that mix. We expanded that operation. We were blessed to bring in this fellow named Kevin Turner as our CEO. Kevin, he's great to work for. He was a former COO of Microsoft. He did that for 10 plus years. Before that, he was the CEO of Sam's Club. Before that, he was a CIO of Walmart. So Kevin really took what was a startup and brought a lot of real structure around behind it. And then he brought in a big team.
So I already know this, but I just like asking it. So let me get this straight. Kevin Turner, your CEO, worked for Bill Gates at Microsoft for like 12 years and worked for Sam Walton at Walmart.
That's right.
In his career.
Yeah, right.
Has anybody ever done? Those two iconic business folks. I
don't think so. Yeah, it is, and it puts Kevin in a unique position to run our company because now he surrounded himself with guys that understand big corporate structure and also guys like myself that have been in the startup space for a while. And it's been a heck of a run because you put those two structures together, and what you've got is big corporate structure, but you've also got just enough startup experience in there to kind of shoulder in when things need to be done to get it done.
Yeah, keep you nimble if you need to pivot and whatnot.
That's right. That's right. Yeah. And we have really grown. We grew through, of course, the bull market. We grew through the bear market. We're now growing again in the bull market. We're the only vertically integrated infrastructure and mining company in North America. By vertically integrated, I mean we own our facilities. We host other people's equipment. We host our own equipment. And that's a big deal because owning the infrastructure, if you're a miner and you just own mining equipment, that equipment has a 2 to 3 year life. So you have a 2 to 3 year investment in this thing. At Core, though, we own the infrastructure. We have a decade. We have a long-term view of this world. This economic environment. We do host, though, for other folks. Our main clients are public traded companies, hedge funds, big institutional players, family offices that want to be in the digital asset space.
So I've been told you guys are the largest hoster of Bitcoin miners in the world outside of China. Is that accurate?
That would be that could be accurate. Certainly North America. Okay, certainly North America.
So why is China so strong on this? And by the way, I for folks who are listening in, I want to point out that I already know a lot of these answers because Russell was. You've always been world famous. Let's face it. However, you became even more world famous about a couple of days ago when the Wall Street Journal made a video about you and what you guys are doing at Core Scientific and comparing it to kind of. The other side where the Chinese are mining. So China's the largest miner in the world, right?
They are. And in China, you have a lot of your foundries. A lot of your silicone comes out of Southeast Asia. A lot of your manufacturers of this computer equipment comes out of Southeast Asia and comes out of China. And there's some great companies there. And China was ahead of the U.S. This is one of the few techs where the U.S. is not leading right here in this space. China is leading in this space. Europe and the former Soviet bloc, Russia, is leading in the software. But we partner with a lot of the great manufacturers in China. But a lot of the large mining farms, a lot of the large mining areas first started out in China. Now, in this cycle, it's growing because there's more demand or more institutional demand in the United States and Canada. So our infrastructure is moving to North America. But in an ideal world, as far as let's just talk about Bitcoin specifically, in an ideal world, it's actually global. I would love to see nothing more than 30-40% of the Bitcoin market in China, 30-40% in North America, and then kind of the rest of the world picking up the rest. Mm-hmm. A few years ago, it was 70% of the mining took place in China and 30% in the rest of the world. And that may be good for China, but it's not really good for the overall ecosystem of Bitcoin. So I think what you've seen is your large Chinese firms, they're not abandoning their Chinese operations at all, but they are looking to expand their other operations around the world because they understand that for the global digital asset environment, it's good to kind of be a global piece. It's good to have it everywhere around the world so that no one country has too much control over it.
Yeah. So explain to the folks that are listening, like, how do you make money as a Bitcoin mining company? Like, how does that work? Like, it's not, it's,
what do you call money? Do you call it Bitcoin or do you call it USD?
That's right. Could be,
it's made two different ways.
Could be USD, could be Bitcoin. Yeah. How do you make profit? Like, why do you do what you guys do? Like, how does revenue of some sort get generated? This business?
when digital assets trade hands for whatever reason, either an exchange of value or in the case of like Ethereum, there's a smart contract. So if you want to look at it one way, you can look at Bitcoin as a store of value. In my opinion, there's other coins that are probably better at exchanging value. There's some stable coins that I think look good. I think there's some interfaces that need to be improved to make it more of a usable currency. But Bitcoin is a store of value. Ethereum, when you buy Ethereum, you're actually really licensing a piece of Ethereum token to use the smart contract technology. But in the world of Bitcoin,
Josh is over here nodding his head up and down. I think he's tracking.
It makes total sense.
Right?
Guys his age are going to get this because they use Venmo already. And if you took Venmo and you changed it to Bitcoin versus dollar, it doesn't matter. Yeah. They don't care. It's Venmo for that generation. So, in the world of Bitcoin, though, when there's a transaction that has to be processed, Bitcoin is paid as a transaction fee, and there's rewards. So every 10 minutes, a reward block is produced on the Bitcoin network. That reward block has Bitcoin in it. So your miners are encouraged to provide the processing power to secure the network. So that's what miners are doing. Miners put the machines up, and those machines process on the network to provide the security and the actual processing of Bitcoin itself. And most of the other digital currencies work in kind of the same way. So if you're a miner, you
Satoshi Nakamoto? Is it? Are you?
No,
you're that guy. You are
not at all. Not at all. So, and what's cool about Bitcoin is...
Is there an anagram in your name that goes to make Satoshi spell out? Doesn't, but I mean, I'm just curious about
what's cool about that is, no one knows who Satoshi is. Right now, if someone tried to replicate Bitcoin, it'd be very hard because humans are naturally suspicious of other humans, but no one knows who Satoshi is.
Share the backstory for folks who don't know what I'm talking about when I say Satoshi Nakamoto. That's funny for us, but tell the story.
So 10 plus years ago, Bitcoin just came about from a 7 or 8 page white paper written by an anonymous source called Satoshi. And that Bitcoin white paper became Bitcoin, and it really created the foundation for the technology that is blockchain, which is and blockchain has expanded way beyond Bitcoin. But it's an anonymous source, and there's been debates for 10 years on was Satoshi a single person, was Satoshi a group of people. Either way, it was either a very smart person or a very smart group of people. They predicted a lot of things into the future, and no one knows who Satoshi is. I just saw a list of wealthy folks, and Satoshi was a person that'd be worth $47 billion because Satoshi's wallet is still on the network and everybody can see it. So you see how much Bitcoin is on the wallet.
Wait. Satoshi still has a wallet on the network?
Yes, there's a wallet on the network that's associated with the founding of Bitcoin, and you can watch that wallet. And
does it? It
has 4 million Bitcoin in there.
I was going to say, are there debit? Is anybody taking money out of it?
No. If someone ever does, that person is Satoshi. So if you want to find out who Satoshi is, when that money moves, The whole world will be watching.
Is Satoshi one of those guys that's sitting in bed right now who's used 7 out of his 10 code, passwords? There's this guy in Europe or something, right?
That's right.
Who was given a reward for a speaking fee of Bitcoin years ago,
right.
and they gave it to him on a USB stick.
German fella.
Yeah, and the stick said, I don't know how this works, but basically he forgot the password, and he has 10 tries to get the password right, and he's done 7 out of the 10. And it's not for a little. Right now, it's what, $600 million would be the value on that,
I don't know, but
stick of the USB stick.
If you don't have a wallet somewhere where you forgot the password, you're really not a crypto guy. So I don't even want to tell you.
How much money?
I really don't want to tell you like how many wallets I've messed up on.
Oh my gosh!
Because it would probably upset me and my wife. My wife even more.
But But there's also a dude. I mean, we're going down a tangent here. There's a guy I heard that threw away his hard drive with a bunch of it, and a private equity group has partnered with him to go digging through landfills trying to find it.
Because it's a lot. Yes, that's in Europe. That's in London or UK. I think that was in the UK. So that happens. That absolutely happens.
How crazy is that?
And that's one of the things.
And these aren't small dollars.
These are. Well, they were small dollars at the time. They're not small dollars now.
Oh my gosh.
But that's part of the issue with digital assets and cryptocurrency is the user interface. And I think some of the things, Facebook's working on some user interface. I think PayPal will be good at that.
MasterCard's got some stuff they're going to be pulling together, right?
As soon as some of the companies that are better at user interface kind of get involved, I think we'll see digital currency become more capable of being a currency transaction, because right now the user interface is difficult. I'm in the space and I'm telling you I've got wallets that I don't have the password on because the user interface is not easy. So the one of the things I tell anybody that wants to get involved in the space is, pay attention to your passwords, pay attention to how you set this stuff up, because, it is difficult, and the user interface is not easy. There's good wallets out there, and there's better user interfaces, but the world hasn't transitioned yet to make it where it's as easy as it should be. When I can access my wallet using my facial ID on my phone, then that's going to be something, because that's where the world of blockchain really is going to get to one day. And that's, you go to register, for let's use voter registration. That's a good example of blockchain.
That could be super interesting. All right, let's talk about voter registration.
Let's just talk about voting and blockchain. So that's a good example of
By the way, how many states require a photo ID when you go to vote? Do you know?
I don't know.
About half of them.
So
you can go and vote right now with only in half these states. If you give the right name, you can vote, but you don't have to show an ID. But I personally think that's crazy, right? Everybody, if I got to show an ID to buy a pack of gum or a beer or catch a fish or get a fishing license, all that stuff, like you should be able to show an ID to vote.
Well,
but
let's just talk about how blockchain can be used in voting.
Let's hear
again, not digital assets. Again, and I'm going to real high level. You go to your voter registration office, you vote. They scan your thumbprint or your face. So your key, your private key, becomes your biometric access. And then all of a sudden you have an app on your phone, and your public key is just, you go into the voter registration using your public key. Your private key allows your face to be scanned. You vote using your private key, which is your face scan. That's your security. And all of a sudden you're able to vote from your phone. Now, how many people would vote if all they had to do was, once they register, was download an app and do it? And that's a great way. That's a great use of blockchain, because you could store your voter information anonymously on the blockchain. The public information could be available to everyone to see, which you want. You want to know that what the voting results are. But your private key, i.e. your bio, is protected and secure on the blockchain, and that's the only way you can access it. Now, that means you could go...
Somebody can't hack that?
So right now, no. Let's take Bitcoin, for instance. It's SHA-256. That's 256-bit encryption. Now, the great thing about a blockchain is every time data is changed on the blockchain, a new block is made. The old block still exists, but a new block is made. So before you can brute force hack the blockchain, the whole database is moved. That's why it's called blockchain. It's a chain of blocks. So if you think of a database as a Rubik's Cube, XYZ coordinate, a normal traditional database is just one Rubik's Cube, and you might make a backup of that Rubik's Cube. But if someone is trying to hack it, they just brute force go after that XYZ coordinate, try to hack it. But with blockchain, Zeb, you've changed something on the XYZ coordinate, you changed the data, a whole nother copy is made. So by the time that hacking group has hacked the old chain, the new chain is already moved.
And they have to do it, I understand, it needs to be authenticated almost 6 times on the chain. Am I mixing this up?
No, you're mixing up pieces, but that's correct too. So authentication has to happen. That means what happens is when the machines are going back onto the blockchain, they're looking back in time. So they're looking at each version of the Rubik's Cube all the way back in time to authenticate and make sure that the data is accurate and that whatever that transaction is or whoever's trying to do that transaction, that they had the permissions to do it. So that's how you authenticate, and that's why you use miners, because the miners authenticate transactions and make sure that the two people doing the transaction both of them had the right to do that transaction. So they look back in time to say, okay, if we go back in time on the Rubik's Cube on the blockchain, we can see the data as back in time, and then we can see it going forward.
That's just crazy. So you aren't Satoshi. You're not
even.
You don't have
close.
$47 billion in an account. You haven't pulled out
of
it yet.
Not even close. Not even close. That is not my area of tech. I can plug in Ether cable and make internet work, but I cannot do any kind of software at all. Yeah.
So I heard you said something recently which was like my head almost exploded, and it was about how blockchain, specifically the Bitcoin network, is like you attribute it to being like this, humans working for a machine, right? Tell me, share that with everybody, because it is so fascinating when you think about it as almost this like singularity event.
Yeah, I was going down a rabbit hole.
That's right. Well, but this is, look, we're
on another podcast. I was going down a rabbit hole, and someone asked a question, and and
the question was,
just about the fact, what is Bitcoin and how is it advancing and all that, and I just made the off the cuff comment that I really do think about when you think about it. Bitcoin is its own network. It's its own AI. Per se, it's growing, and it somehow has convinced humans to build out this massive network and support it. So you've got humans all over the world supporting this software program. Now think about that.
Yeah.
No one knows who created the software program. It's alive, it's breathing, it's moving, it grows. And
we're dedicating, humans are working for it, dedicating.
There's a whole industry built around it.
Billions of dollars and all this time just for a computer program.
That's right. We've built out this whole industry around it. Now,
so is that
Kevin's probably going to call me and explain that I can't do any more podcasts.
Kevin's not. Look, this is Russel Cann's opinion, right? It's said another way. I'm going to liken that to almost Skynet for all those folks out there who've seen Terminator, right?
Because think about it, like we are, we're building infrastructure.
So
we're building infrastructure. We're making computers. We've got help. We built the whole financial system around this thing, and it's literally a piece of software code. It's just a piece of software code. And
with a whole bunch of computers.
And a whole bunch of humans working.
Yeah.
And we're all working to get paid a little trinket off the software code, right? We're not even getting paid, they're not even producing a cupcake. It's like
you're not even getting a chicken.
Right.
You think you're like, hey, give me something I can really use.
There's not a chicken or a goat. You're getting a digital trinket,
But you know what's crazy? Like humans.
I'm getting a digital cat.
Humans have always said, like, well, if you can use something in exchange of bartering, right? Like whatever you're trading, we just happen to exchange now, pieces of paper with some numbers on it, right? Backed by a government. But, you can go to the South Pacific. There's an island there called Yap, where you can actually trade. They trade in rocks, and not small rocks, like big rocks. So humans attribute value to things.
That's right.
Even if it's completely ridiculous on how you transfer it. It's whatever they agree is the medium for transferring value. Yeah. And Bitcoin and other digital assets is just one way we could do that, even though it started off as
I think
worth nothing.
Musk had it in a tweet, and I thought it was actually brilliant. I don't know if it's true to him or someone else, but he said it's just an efficient use of barter. It's just an efficient barter system.
Yeah.
Money is an efficient barter system. Digital assets, cryptocurrency is just a more efficient. It's even more efficient than money.
Yep.
So humans have always needed a barter system. Hey, Zeb, I'll give you this goat and you give me 2 chickens. That's the barter system, and then we transfer that up.
But I got to carry those chickens around, and that's not
exactly.
What I was
so we're just looking for more efficient. So then we started carrying gold around. Then we started carrying, money around, and then we started saying, well, you don't need
to use a credit card.
We use a credit card, and now we're like, well, we don't need to use a credit card. You could use a biometrics and access your online wallet somewhere. So it's just humans are evolving, and our source of barter is evolving to try to just be more and more efficient.
That's crazy, man. All right, so you guys are obviously deep in this space. Yeah. You've been in the space. What was your thought process when we found out a few weeks ago that Tesla and Elon Musk came out, and he'd been tweeting about this for a while, right? So you obviously knew he was thinking about it, and some people recommended he add it to his balance sheet. But he plops out one day, through an SEC filing that he's got $1.5 billion of Bitcoin on his balance sheet. What's going through your head when you hear about that?
We've been doing that at Core for years now.
Hey, Elon, basically Russell's saying you're so late to the game.
No, I'm just saying, but those of us. So actually, what went through my head is, hey,
he gets it.
Well, not necessarily. Well, yeah, he maybe gets it. But
sorry, you say it.
Institutional investors, corporate America, when folks, there's now been kind of eyes are starting to open up to the world of digital assets. And just like a corporation could say, we want to own, futures contracts on barrels of oil, or we want to own, stacks of gold, whatever we want, whatever, we have as a store of value. He's saying, hey, as a corporation in the United States, we're going to put some of this on our balance sheet. And there's other folks putting it on their balance sheet too. So it's a store of value. It's not related to the USD. It's certainly not related to inflation in the USD. Some people could look and say, look, we printed trillions of dollars during COVID, which was needed. We needed it because we had to stimulate the economy, keep it going. But, that inflation is going to have to come down at some point. And quite frankly, that inflation is not happening in milk and eggs. It's happening in Ferraris and yachts. I mean, there's just...
And some real estate, too, in certain parts of the country, right? I mean, and building prices. I mean, you're watching home values, skyrocket. Construction costs go up. Steel's going up, But there's some things that it's not hitting, and there's others that it certainly has, right?
But some people could say that digital assets are a hedge against inflation because there's no central banks controlling it. Now, let's take Bitcoin for instance.
So say more about that. Like people need to understand that this is not something that can be manipulated. Not that I wouldn't use the words that the Federal Reserve is manipulating the U.S. dollar, but they are printing more of it when they choose to, and that is. You're devaluing. When you make more of something, you're devaluing the ones that are currently in society.
That's right.
That cannot happen with Bitcoin.
Well, there's a finite amount of Bitcoin, and
how many?
21 million, and there's only 18 or 19 million out right now. The others will be created over the next 100 years or so. But what's important is that digital assets are a free market. They're the only free market, really, when it comes to currencies and stuff, because every other market is regulated in some way. And I don't mean that regulation is bad. Matter of fact, if you ask me my humble opinion, again, not core, my opinion, is I'm good. I like regulation. Regulation is good. I don't like regulation that stifles innovation. I think too much regulation that stifles innovation is a bad thing. But I like rules. Tell me the rules and let's play by them. So I'm okay with regulation in digital assets.
Like having the same things you got to show when you open up a checking account somewhere, right?
I have no
who you are, where your money came from. You're not an illegal actor. That
regulation,
sort of stuff.
Right? Regulation that says you're not a terrorist or you're not a criminal and you're gonna pay your taxes. I'm fine with all those things.
Totally agree.
Regulation that stifles innovation, though, that keeps you from being able to, if we had stifled innovation around the internet, we wouldn't have the internet today. And it's a great form of global communication at this point. So I'm a big proponent of let's have regulation. At Core, we follow all the rules. At Core, we're audited by Ernst & Young. We're getting our third audit right now. 3 years, Ernst & Young audited financial statements. We follow all the rules. We do KYC. We do anti-money laundering. I'm a big fan of those rules. But just you don't want to have so many rules that you stifle innovation. Mm-hmm. Digital assets, I think, as we look into the future, are going to be a more efficient means than the dollar. But I think more important than that is blockchain. I think, we're only just scratched the surface on what blockchain tech can do in the world of agriculture, in the world of voting, in the world of public records, in the world of DMV records, vital records, things like vital records. Let's think about that. Vital records, birth, death, divorce, or birth, death, marriage, then divorce. Those are things that...
Yeah. Okay, we got you.
You got me.
We got to have marriage first, right?
Yeah, marriage and divorce. But those four things, those vital records, are something that we as society say we want a concrete record of that. Mm-hmm. Right now here, we're in South Carolina. You go down to Bull Street, and there's a building there, and they actually keep a concrete record of those things. Or at the courthouse, they keep a concrete record of marriages and divorces. So, concrete records that never change, those are things you could put on a blockchain real easy. Property records are things that we want concrete records of. We, as society, for several hundred years now, have said we think property records are important. So those are kind of things that I think we're going to see move to blockchain because it's just more efficient. It's just an efficient way of doing things. Mm-hmm. It'll take a while, but what'll happen is there'll be experimentation around the world, and folks will. But efficiency always wins in business or in government. Well, I can't say efficiency always wins in government.
I was going to check you on that one.
Yeah, check me on that one. Efficiency does not always win in government. You would hope efficiency wins in government. So, eventually, though, blockchain technology outside of digital assets, I think it's going to be, a driver. And you pair that with AI, machine learning, and blockchain is the store of data, and AI or machine learning is the processing of that data. Mm-hmm. A friend of mine, Jim Benedetto, told me. And he's an AI guy. He's just a guru, in my opinion, on the space. He said, the world started in 2018 producing more data every day than we'll ever be able to process. So we're producing right now. We're producing more data than we'll be able to process. But the way we'll get to eventually catch up is through AI and machine learning. But if you want to think about those two things, you think about blockchain as how we store it, AI, machine learning is how we process it.
Oh, that's crazy. All right, so let's go back to Elon Musk adding the $1.5 billion onto his balance sheet. I mean, he looked at that and said, I'm gonna use this as a substitute to cash or other anything else he was holding, really any other assets he had, and said, I view Bitcoin as a solid investment going forward. Partly because I think he wanted to take Bitcoin as payments for cars, but also he obviously said this is the future, and I want to. He's cutting edge on this stuff. Who else is gonna? If you had to guess, who else is gonna follow in his footsteps? Should a large company like Eli Lilly, for example, in healthcare, with sitting on billions of dollars of cash, also should they be? Should anybody be Procters and Gamble's of the world be considering this?
I'm going to go out and again, this is going to be my humble opinion.
Yeah,
Elon makes a product, his cars, that he sells around the world. So a globally accepted currency like Bitcoin is a great way to say, you know what, I will always trade you one Bitcoin for one of my Model 3s or whatever. So, if he thinks he wants to accept a globally accepted currency, then it's not a bad thing to be on his list. I teased and said, if McDonald's ever created its own cryptocurrency and said, you know what, you can, anytime you want, you could trade in this currency for a Big Mac, that would become a globally accepted currency. You know why? Because there's McDonald's everywhere. And everyone will create a value to that. They'll say, you know what, I can always trade that little digital token right there for a Big Mac.
Yep.
And it's the same kind of thing. So if Elon
McDonald's, are you guys listening? I'm sure the people are thinking about this stuff. But
McDonald's,
if not, you're going to get a call, Russell.
Well, I'm just saying, like some of those companies that have a globally accepted product, if they said, yeah, you know what, we will always honor this token for this product, that's how money works. The U.S. government says you can pay your taxes with U.S. dollars. That's the whole reason it's created as a thing. Now, the rest of us sit around and said, we'll take it too. But the U.S. government saying you can pay your taxes with U.S. dollars is why it has value. Mm-hmm. If Jeff Bezos and Amazon said you could trade in this token for Amazon products, people would buy that token because people buy stuff on Amazon. But so if Elon thinks he wants to accept, and I'm not meaning to put words in his mouth, if he wants to accept Bitcoin as a means of payment, then certainly he wants to have it on his balance sheet. He's going to have it on his balance sheet. And I would think any other big manufacturer that wanted to do that could have a digital currency. And there's an area definitely where I would do it, and that's it, maybe not Bitcoin, but digital currency in general, and that's video games. Online gaming, I mean, I don't know if you played World of Warcraft. I did back in the day. The gold on World of Warcraft had real value because you used it to buy, digital armor. So, things like online gaming definitely has a place for digital assets, and because it can move back and forth in digital space very easy. Mm-hmm. But in the real world, if you sell a product and you sell it globally, then certainly you could say, yeah, we'll accept digital assets, and it doesn't necessarily need to be Bitcoin, but it could be something else. But you could say, yeah, we accept digital assets. Now,
I could sell my Delta Sky Miles, right? It's not quite the same thing, but it's
not quite the same.
It's an imaginary thing that we have attributed value to.
Yeah, that would have value somewhere to somebody.
Right?
Now,
it's an airline ticket.
Where you're a manufacturer like Elon Musk or any other manufacturers, you have to match your expenses with your revenue. So there's a currency issue there if you're selling in Bitcoin but you're paying in yuan or dollar or whatever. So you have, but the world has figured that out. We do that all the time. The international companies do that all the time. They manage their currency risk. But certainly I don't know about Eli Lilly with its drugs, but someone that's selling to consumers around the world,
be a Procter and Gamble or somebody, whatever,
or Eli Lilly, but certainly Tesla has factories in China, so they're trying to sell their Teslas in China, and they're trying to sell them in California, and they're trying to sell them in Germany. Well, okay, I can accept all those different currencies, or I can say, you know what, I'll take one Bitcoin for that car.
Somebody told me, I haven't run the numbers myself, but the Teslas made more money. Granted, they don't really make much money. They make money selling credits, but that's a whole another thing. I don't think they should be valued where they are. But they made more money on their Bitcoin investment than they have ever before selling cars or credits. Is that not crazy?
A little crazy. Yeah. So, but it makes sense. I mean, that's just what happens.
So break out your crystal ball. Where is Bitcoin price going to be a year from now?
I can't tell you that.
Same, higher, lower?
I have no idea. I will say.
Josh already knows. Josh knows everything, by the way.
I will say, I think a year from now, we're going to look and we're going to see more institutional folks. We're going to see more adoption in North America. We're going to see more adoption in Europe, and not just Bitcoin, but kind of cryptocurrency in general, digital assets. So I think the more normalization it becomes, the more people get used to it. I hope we're going to see some companies introducing better user interfaces.
Yeah.
Square is heavily involved in this space. They're a point of sale system. If you make it where your point of sale system at retail can use digital assets, that's just another easy thing. I mean, I went to Starbucks twice today. Both times I didn't touch anything except for my phone. I used an app. Starbucks can say, well, you know what? We now have a Starbucks token, and you trade it in for coffee. It'd be the same thing. Like, I did not even pull my wallet out. I just used the app on my phone. So, certainly the world, at least in our country, is getting used to, a digital kind of money, But I say that, but there's certainly, and you know this from your vast experience, Sub-Saharan Africa has been using digital money for a decade now, right? M-Pesa.
Yeah.
It's literally one of the first digital assets.
The country of Kenya has adopted M-Pesa. For those who don't know, it's basically a cell phone exchange of currency.
It's a digital asset.
And it's a digital asset, and it's been there
currency.
For at least a decade.
At least a decade.
Yeah, it's crazy, right?
The whole population uses it.
The whole population uses it. That's like the form of currency after whatever the Kenyan shilling or something, whatever it's called.
That's right. So, the world is used to it in different forms. And I think there's just going to be more and more massive adoption. So I don't know. I can't tell you what the price of Bitcoin will be. But I will tell you, I think there'll be
$1 trillion. You got on the record. Russell said it. It's going to be $1 trillion per Bitcoin. It's going to be awesome.
I will say there will be something I think will be interesting is when a few governments, whether they're state, local, or even small countries, decide to pull a MicroStrategy or Tesla and put Bitcoin on their balance sheet.
Now, you just said something that I wasn't going to bring up, but I'm going to go ahead and ask right now. Right, China's the largest Bitcoin miner in the world, right? Mm-hmm. Or the people of China or the government of China or some combination thereof. Could there be a situation where China ends up using that as a reserve currency at some point in the future because so much value is created from it? They're just holding it on their balance sheet like they would treasury bonds or RMB, yuan, or gold. Or
I personally don't think it would be China, only because I think the Chinese government likes to control things too much.
So they don't have enough control over it.
And they don't have enough control of the currency. Now,
but they hold a lot of it.
They hold a lot, and if currently they control a lot of the network. Although we are, greatly catching up. And again, I've already said this. There's great companies in China, and in my personal opinion is the more it gets spread out, let China be the manufacturer of the machines, let the United States be good at infrastructure, yet Europe and Russia be good at software. People just specialize in things. But I do think what we're going to see is you're going to see the city of Miami, the state of South Carolina, Liechtenstein, some small Caribbean countries. You're going to start seeing them add it to their reserve currency bucket. And when that starts happening, you're going to see more and more people go, okay, you know what? We'll make this one of our basket of currencies. We'll make this one of our 6 currencies that we're going to hold. And again, people like to say Bitcoin is like digital gold. It's just a means of holding value. I mean, there's really no difference. I mean, what's the value of gold? It's got a little bit of value to make circuit boards, but other than that, just jewelry, right?
Jewelry.
Not a whole lot.
How much gold are you wearing right now? I got none on me.
My wedding ring is a $15 Amazon ring. Because I lost a nice one twice. So I can't look to the future and say what I think the price of Bitcoin will be, but I do think a year from now there will be more adoption, not just in North America, but globally. But what I'm more excited about than that adoption is looking into the future on what blockchain is going to bring. Because I think that technology can really accent our lives in a positive way.
So why isn't everybody? I mean, why aren't people backing the truck up to become Bitcoin miners right now? Like, this sounds like a really interesting, fascinating space, a lot of growth potential. So, hey, floodgates are open. Come on, everyone. You can become Bitcoin miners too.
It's a lot of work. It's a lot of capital. It's volatile as hell. And so that's not for everybody. So let me go ahead and tell you, Bitcoin is volatile. It goes up and down a lot.
What's it trading at right now? Hold on. Let's look.
It's probably moved $2 or $3 grand in the time we've been talking.
Yeah, it's
right.
It's 48.7 or something.
It's
goes
volatile.
Up and down all the time. Was it 58 over the weekend for crying out loud?
So it's because it's a global currency, and you got to realize that it's 24/7, 365. Here in America, we used to work in 8-hour days, 5 days a week, and that is not the way this market works. When you go to bed, the whole world in the world of Bitcoin is still moving. So you have to realize it's a global thing, 24/7, 365, and that's just the way it is. So the reason everybody's not backing a truck up to do it is it's capital intensive, it's labor intensive. There's a lot of engineering involved to make it efficient. There's limited supply of silicone in the world. There's limited supply of miners in the world. So there's only so much.
I can't
of those
just go down to the local Best Buy and pick myself up a miner.
No, you can go down to local Best Buy and pick yourself up a GPU and mine a handful of different digital assets, but you're not going to mine Bitcoin on that GPU.
Interesting. Where do I go to buy? If I showed up and said, "Mr. Russell, sir, I have one of these costs about $5,000,
$5 or $10,000.
$10,000, right?
Yeah.
I've got $10,000 burning a hole in my pocket. Buy me a Bitcoin mining unit. Can I just go out and can I buy one from Core Scientific like today if I wanted to?
You could buy a couple thousand from us. At Core, we kind of target larger folks who want to be involved in the space, but there are great operators out there that would say, yeah, we'll host your one machine for you. I will say this, you're not going to do it at home. Because
like that guy in California who basically got arrested
because it's using 220. It's like using your hair, your clothes dryer. So it's really too much power for like home use, and that's really not an efficient use of power. We go back to talking about the power grid again. When you have dense residential, you need power in that dense residential area. The most efficient use of Bitcoin mining is to go somewhere where there's power being generated, but there's not a heavy population for it, right? Mm-hmm. You're not going to Bitcoin mine in New York City or in California. You want to go somewhere where there's power generation, but there's nobody using it. Yeah. And that's going to be the most efficient use on the power grid.
So you guys only sell to in the tunes of thousands, but if the average person, they couldn't show up and call if they had say you had $25 million available right today. And you're like, Mr. Russell, I want $25 million worth of mining units.
Well,
can you do it?
Everything's for sale, right? So I would probably, the Silicone Supply right now is in short demand, or is in short supply. Sorry, high demand, short supply. Certainly, if you're willing to overpay for machines, we could get you machines because someone will sell you theirs.
Everything's for sale at some.
Everything's
point,
for sale
right?
At some price, but at a reasonable price, you're going to have to wait months. During the pandemic, the Silicone Supply. So during the pandemic, and again, I want to go back a year and a few months. In Southeast Asia, the pandemic hit before it hit in North America. So the foundries and the manufacturing supply chain was put on pause there. And when those foundries went on pause and manufacturing went on pause there, it happened before we happened here in the States. Here in the States, it happened about a year ago now. But in China, parts of Southeast Asia, it happened months before that. So there was a supply chain issue. And that supply chain issue still has not worked itself out. You can see it not just in silicone, but in wood. 2x4s here in the States went from $2.50 a piece to $9 or $10 a piece because
even
mills.
Steel, we've seen steel prices are off the roof, right?
And it's the same thing in the world of silicone and computer chips. That pause put a tremendous, just put a tremendous logjam. To go back to the mill analogy, put a logjam in the system. And it's going to be a while. It's going to be all through 2021 and certainly into 2022 before that supply chain catches up. And you got to realize in the world of digital assets, it's the same foundries that make chips for the iPhone, your laptops, your iPads. The same foundries make chips for Ford Motor Car. Like, there's only so many foundries in the world, and there's just supply chain issues. So right now, if you wanted $25 million, someone would sell you $25 million worth of machines. But Zeb, I can't tell you you'd be getting a good price on it, right?
You'd be overpaying pretty bigly, and then on top of that, your return on investment is going to be
low,
take you a long time.
That's right.
Interesting. All right. Hey, what other? I'm looking over to Josh and Barry. What other questions should we ask Russell? Josh, you're a tech guy. We got 5 minutes left. What else? What do you want to ask him?
I mean, you answered a lot of my questions.
Is your mic's on?
Yeah.
All right. Cool.
It's somewhat on. Yeah, you answered a lot of my questions. I was just coming in wondering some of your thoughts and positions on decentralized finance and stuff like that. Just because, Bitcoin kind of opened up to Web 3.0 now. So you're one of the leading, I'd say one of the leaders of the industry in opening Web 3.0. So that with a whole bunch of other people coming along being oh, we need decentralized finance and cryptocurrency is the way to that. What are your thoughts on this?
I think so. Decentralized finance is in its infancy, but I think there is, and I think there's going to be innovation in it, and I think there's going to be a market. I think the market needs to mature, but I think there's definitely room for it in the world. Decentralized finance, it can be good and it can be bad. I think I want to. I hate to use a common vernacular. It's in the room right now, but like the Robinhood, GameStop kind of stuff. It's decentralized, the democratization of the financial markets, right? And I think DeFi can be a democratization of the financial markets. But much like any other cryptocurrency, it's there's an algorithm. It's based on math, so it's easy for folks to understand. But again, I think there's going to be some maturing in the market. Like anything else, like Bitcoin when it first started, there's a lot of folks made a lot of money very early on because as DeFi was just getting started, everyone didn't quite understand what was going on, and there's a few people that made a ton of money off of it. I think the returns will get down to not in the stratosphere like they have been, but I think as that industry matures, I think you're going to see a use for it. I think there's going to be a market for it, and it's going to be a global market for it. So I think DeFi is something that there's a lot of innovation that needs to happen. But it will happen because there is a demand for it.
Yeah, definitely. Back in 2017, like we're seeing innovation happening already with the graph just coming out back in December, where it was just a mere thought in 2017. And now it's like they just released their network. So it's like this decentralized, basically indexing protocol.
That's right. I have no idea what you just said.
But similar to like some of the ICOs,
that means initial coin offering.
Like they have
these guys are totally nerding it out over here.
No, but I'm saying like in 17 and 18, there was some turned into be great tech and some turned into be scams. Right? And I think you can see the same thing in the DeFi space where, some are going to be great tech, but it goes back to, the internet boom. Are you going to be Amazon and PayPal, or are you going to be Webvan, right? Like, is it going which one is going to be the legit company that develops the tech that becomes, what the world uses, and which one is going to be, a sideways thing. And just like in the ICOs, there were plenty of them that were scams, just people full of shit. But there are also some that have turned into and are turning into great technologies. And I think, DeFi is going to be the same way. There's going to be some guys that are scamming and making money off the name or off the technology that people don't understand. But I think once the innovation happens, I think some of them will come out and it's going to be another game changer. Because it's going to be a democratization of that whole market.
All right, go ahead. We have one more. Yep.
NFTs. That's the big NBA Top Shot, digital collectibles. What are your thoughts? Like right now, is that's what's pulling a lot of people.
NBA Top Shot. What is this, Barry? So I don't know what this is.
It's a NFT. It's a
NFT
digital collectible. You can literally collect a moment in sports and you own it.
What's NFT stand for?
Non-fungible tokens.
Is that right?
This is
all right. So you're getting out there, but so tokens. I think blockchain and tokens in general. I think we're going to see the world move to a situation where the tokenization of assets that are hard to own or hard to move, and I think you're going to see that. Own a moment in sports, and it's going to be yours. You have the royalty rights to it. Right. It can increase in value because someone wants to replay that moment in sports. So think of it as a royalty on it. So you think that royalty is going to go up in value, so that token is going to go up in value. The tokenization of a Picasso. You think a Picasso art's going to go up, so it goes on sale for $10 million. People, raise a token. They raise $10 million. They buy it at Sotheby's, and then the whole thing is that token is now issued. You and I each own one of those 10 million tokens, and then we all know that in 10 years it's going to go back on the auction again at Sotheby's, and we all hope that it sells for $15 million at that point. So I think the world of blockchain and tokenization, there is a call for it. Again, I think there's going to be scams that happen. There's going to be people that sell just bullshit. But I think once it's all settled in, that there's a call for that. That right now it's very hard for people to exchange value of some kind of assets. And I think if we can figure out a good user interface and a good way to tokenize things, and again, there's a lot of regulation that has to come out too. But I think we're going to see that more and more as we go into the future. And whether it's digitized sports moments or a piece of a painting or digitized gold, like literally a gold that's in a mint, and we say, all right, we're going to sell a token that represents 1 ounce of that gold. I think tokenization, though, is a way for blockchain tech to make the sale of assets or the record of asset sales easier. So,
We are all out on time for our Team Victus podcast with Russel Cann. Thanks for sharing your expertise and experience here with blockchain, Bitcoin, all things tech related. We didn't even get into your background on how much tech you've been in and all the other companies you've been running and being a CEO and all. But
I actually use Victus too. by the way.
Oh, yeah, so that's
this podcast. I put it on my feet for when I walk, and I put it on my eyes.
That's right.
Bags under my eyes when I'm sleeping.
I use it on my face. Not that anybody.
And
can
these
really
guys didn't
tell,
ask me to say that. I just say it.
So
It's true.
That's exactly right. Have you tried the sleep formula, the rest formula?
I've
yet?
not used that yet. But we want to.
We'll get Barry's got samples for you. So anyway, thanks for joining. Everybody, victushealth.com. Barry's over here.
He was 1.5 because we counted anything with
Only 1.5 on swearing.
Mofo counted as a half.
Okay.
I worked
So
very
we were
hard on that.
4.5 was the.
Oh yeah, I'm actually
and you
really
were
shocked.
way under.
Normally,
yeah.
Russell
Everybody
would
went
swear
over.
like
Everybody
crazy.
was betting over. So
I've been working on that during the podcast.
congratulations.
Awesome.
Betsy, our marketing director, of course, worked with me on that.
Hey, thanks everybody. Thanks Russell for joining. We appreciate it.
Thanks.
All right,
Appreciate it.
take care.